Good morning, afternoon, or evening, everyone. Welcome to today's webinar. My name is Anaiso Frank, the founder of Tradeteq. Before we get started with introductions, and as a reminder, on today's call, we will discuss digitization of trade finance and the use of emerging technologies in addressing the challenges and opportunities in the sector. So this is actually the 7th webinar of our Future of Financial Market Infrastructure series. Our last three were previously we discussed decentralized finance risk with the Enterprise Ethereum Alliance and Conscience Financials, real estate tokenization and real estate-backed digital securities with Brickmark, decentralized ID for tokenization framework, so the DITO framework for short with DigiShares and Polygon ID, and tokenization ventures with from Franklin Templeton, WisdomTree, ABN AMRO with Stellar, enabling real-time corporate treasury management for banks with the Adara team, and finally, building global payment infrastructure with the UDPN team. So I can see that now Saloi is back, so I will stop sharing my screen and switch my camera on. Yes, that should be good. So welcome, Saloi. If you could introduce yourself and tell us a bit more about your role at TradeFinex and what TradeFinex does.
Okay, so basically, I'm Saloi Benbaha. I'm the head of institutional partnerships and working group committees with TradeFinex. TradeFinex is a marketplace, I would say, and an ecosystem that's been built around trade finance to address the trade finance needs. So in the last years, we've seen this global trade finance gap really increase. So our co-founders decided to develop a blockchain to literally create then TradeFinex. So the idea of TradeFinex came before our layer 1 blockchain, which is XDC network. And so this allowed to build on top of that many applications, some dealing with ISO 222 standards and things like that, so that we can address these needs and create an ecosystem for trade finance.
That's great. Thank you. So I will start with a bit of a challenging question first. So over the last 18 months, there are a few trade finance focused projects which attracted a lot of attention in the past that have ceased operation. I'm referring to TradeLens, which was building partnership with IBM on Hyperledger Fabric, the Marco Polo network as well, and Contour that you may know, which was a consortium of at least 20 banks, so BNP Paribas, HSBC, that was built on the Corda network. And the challenge was that they were not able to attract sufficient user base on the platform. And all of those were really trying to meet and address challenging of trade finance today. So from TradeFinex point of view, what are the common problems and the main challenges in the sector today?
I think the first issue, I think some people tried maybe to do the same thing we would do traditionally, but just using blockchain, let's say. And I think the whole process needs to be thought differently and redesigned differently, because by using blockchain technology or technology in general, like for fintech, what you have is literally you have processes that can literally be skipped completely, and some others that needs to be put in place because the system is new. So why these protocols didn't work? I think it's a combination of factors, to be honest. When we look at Contour, it was a consortium of banks, and banks in general wants to keep everything private. So they would look into developing their own blockchain or subchain. That takes a lot of time and energy. And I think even if you put together people, you need them to agree. Everyone wants to do his own thing, and at the end, I think it's about dedication. For instance, at TradeFinex, we've been doing just that, which is the tech side, and we are seeing also, as we get along with we go along with the pilots, we see where are the areas where we need to work harder, and some of them are, for instance, for banks. Let's go back to the SME issue, the trade gap. SMEs get limited access to financial resources. Why? Is because they cannot sometimes justify their credit if they're too recent. They cannot give the right documents, and those documents, can they be verified, and so on. So at TradeFinex, we try to sort that by bringing different projects to work together. So we don't think that we can, being just one entity, solve all the issues. I think it's about working together. And in the tech side, I think many have been building things in silos, but you need to connect all of this data, and you need to have it interoperable to make the whole system globally work, because trade finance is also cross-border.
Yes.
And when you have cross-border, you also have the challenges of different regulations. So if everyone is doing his own thing in his corner, obviously that's not going to work. The other thing I think that maybe created difficulty at the time is also regulation. Regulation now is advancing, and I think I'm based in the best place for this, which is the IFC in Dubai. And Dubai has been doing a lot of things to make it possible for fintech and banks and all the financial institutions to operate safely. So they came up recently with a regulatory framework, which is very different from the ones you would have in the UK or in the US, where we would wait to have an issue, to have then a jurisprudence case that will crystallize everything, and then will be used, as a reference for some other problems. What they're doing here is creating rules that are going to be amended as we go. So because technology is moving too fast, if we do it the old way, that's not going to work for digital assets, tokenization, and things like that. So they're doing it differently. But we've seen also the UK lead the way with the Chris Southwood from ICC UK or Sarah Green from the UK Law Commission, who've been pushing to create the EDTA law
Yep.
and the MLAPR framework, so that we know exactly what are the documents that can be digitized and what are the requirements for those documents to be, considered as, safe and legal. So from that side of things, the UK, for instance, has been leading. But here in Dubai, they've been doing things, let's say, in a different way. Maybe because there was no law on the topic, so they can just create a new thing. Whilst in the UK, there've been already, laws going back, for centuries that can be amended and updated. So we also on two different sides. It's like if you have a telecom company going into, somewhere in Africa when there is no cabling. It's easier to deploy, mobile phone network than it would be to actually go and dig down and get all the cabling. So it's pretty much the same thing. So that's one thing. The other thing in terms of challenges is, so we've talked about regulatory requirements. So you got the QYC, know your customer. So banks to check all of this, it takes time, and it takes a lot of investment and cost. It's a cost to do that, which increases also the burden. You have the collateral you have to check, the credit risk, the documentation. So banks would rather go sometimes for bigger chunk of money, than go for these individual little cases that need a lot of time individually. And what we try to do is to streamline the process. so that when they join, for instance, we could aggregate this kind of invoices that you want to finance, so that when anyone is investing, it can be a private investor, and then things are easier to operate.
Okay, you covered a lot of things here, so I will do my best to summarize. So you covered
Yeah.
the topic of interoperability being a challenge because when we have different trade networks, basically all the different stakeholders need to be onboarded on the same platform. Otherwise, it doesn't work. So it's
Um, I would say it's not. I mean, it's literally beyond that. It's literally people wanting to do their own thing and not working with the rest.
not collaborating. Okay. Okay.
Why? Because there is a risk. There is
Mhm.
this risk factor that is too high. We know, like it could be cyber security, it could be credit risk, it could be country risk related,
Mhm.
it could be bank and financial institution being reluctant to transact with higher risk countries. There's so many factors to take into consideration. The lack of digitalization in some places as well.
Mhm.
So these were the challenges, I think, that made it very difficult to do that. Yeah.
Yes. Okay, that clarifies. So it's less about technical interoperability per se, which is a challenge in itself, but also the collaboration aspect and all the other challenges that you mentioned in terms of risk in general associated with those type of initiatives. You also mentioned that TradeFinex may be focusing on more underserved stakeholder groups. So instead of focusing on the larger, I would say, stakeholders, would that be fair to say that the strategy would be more to focus on the SMEs groups? And if so, in what region? You also mentioned, I would say, putting all those invoices together, so creating new financial instruments, basically. So could you
Yes.
develop this aspect? Yeah.
Well, this is what we're looking into, is to create new financial instruments uh, in compliance with
Yes.
regulations. And also, when you choose because we're doing pilots, it's to choose, for instance, if you are an exporter, you can be pretty much anywhere if you want to digitize your documents, like your bill of lading, your EBL.
Okay.
But if the receiving country ideally needs to be MLTR compliant in terms of regulation, because you don't want a shipment to get to a port and then be refused
Mhm.
because the documents are onto a digital format that cannot be verified because the customs don't have the right tools or don't understand how to do it. And there is also, I think, a big part of all of this is also education. The technology is moving so fast. Companies, institutions, and retail, everyone is struggling to keep up also, because it's every week there is something new. And so, yeah.
So how that TradeFinex and your team really engage with those different stakeholder groups who may
Yes.
have different needs, different level of readiness. They may not have also, even from a legal point of view, the right, like blockchain technology lawyers who understand the implication. So what is the current, I would say, best way, based on your experience, to engage effectively with those different stakeholder groups to onboard them onto those type of trade platforms?
I think it's like a car. You need to drive it to try it.
So
Otherwise,
proof of concept.
it,
Yeah.
it remains abstract. So what we're trying to do is exactly that. It's proof of concept pilots. So we work from different fronts. For instance, we have a joint venture with SBI in Japan, where we are putting together something in terms of pilot. We've been trying to do things with institutions like the ICC France, Morocco, and some others, because they've been especially ICC France with Paris Europlace, they've been highly involved into writing developing the reports about, how to make this MLATR compliance law, and submit it to Parliament. And there's been a lot of work also with ICC UK and so on. So it's about, I think, ITFA as well, in the International Forfeiting Trade Association, has been very useful because it's by bringing these institutions and these companies together. I think it's very important. And there's been also some initiatives like TFDI or DNI who bring this bank together and this to literally have these transactions happening. Because without these working groups and these pilots, everything is just theory. So people. Everyone is waiting on everyone to do it, basically.
Yes. Yes.
I think the fact that BlackRock went into tokenization, went into lately the digital blockchain kind of, with the ETF, blockchain ETF, has given a green light where people were hesitant. And we are seeing, for instance, in this market, in terms of crypto, that it's been led more by institutions than the previous markets where it was pretty much retail led. So we can see now that there is for this bull run, I would say there is a different constitution of the market and different players acting, and acquiring digital assets and investing in the digital assets and developing their own blockchain or developing their financial tools.
Yes. So you mentioned the UK Electronic Trade Document Act, and what it does really is to facilitate the transformation of trade and trade finance document into digital asset. So that's what you are saying, that now there are regulation in some jurisdictions which provided regulatory clarity for those new financial instruments which are from the trade sector to be invested in by institutions, by approved investors, but correct me if I'm wrong, not by retail investors yet. So these remain really authorized investors, approved investors, and institution realm.
Well, because you need the QIC, the AML, there is like some compliance to have. Onboarding retail is more complicated because you have to be careful on how you advertise everything, how you structure everything, in which jurisdiction, and then there is many regulations, getting in the way. So let's say you create something in Dubai and it's being accessible in the US, then US law will be applicable. So you have to be looking at all these little things,
Mhm. Okay. So how does it link when we talk about ESG investing, so environmental, social, and governance investing, how does the use of blockchain technology in trade finance and trade finance as an asset class in general, how does it benefit from the technology in terms of transparency, traceability, and can you share with us like key learnings in that aspect from the different pilots that TradeFinex has been doing?
Transparency, definitely, because blockchain allows to trace everything. I even attended the conference last Monday, the Digital Asset Forum, where they literally were saying that AI we might not be able to run it like that. Blockchain will be like we say in French, le garde-fou of AI, because you need blockchain will make it possible to verify, even if there is so much deep fake and fake information and things created with AI. So blockchain can actually make AI safer in a way. And be used to as a benchmark to trace data and follow up. Yeah.
Yep. So in terms of trade document, we will be able to ensure no counterfeiting of documents, that everything is also per norm. And in some countries which are more at risk, the use of those technologies may help in the long run. It probably won't be
Definitely.
within, yes.
Definitely. I'll just give you an example. For
Mm,
instance, XDC Trade Network, which is one of the dApps on our ecosystem, it has been created MLTR compliant, and they've worked with Singapore authorities and TradeFlow, Trade Trust to have this solution where you take the document, you have a reference, you go and you can verify live who is the owner of this document, who's
mhm.
created the document, all the information, like you would create a bill of lading for a trade, but then you can have access. Not everyone will have access to that information. Only the people who have access
Yes.
are giving it, right? So it's a mixture between Hash and NFT for a
Mhm.
document, and so you can go and verify, and that same document, if it's tokenized, let's say it's a shipment of, like we've had on one of the pilots, we say, let's say 1 million, and you divide it into 8 tokens, and you take one of these tokens and you can raise liquidity. How that token represents a percentage of the shipment value, can be transferred to a custodian. The custodian, through the investors, will release the money, and once, for instance, the shipment arrived, let's say they wanted treasury for 7 days. So after 7 days, that person can recover the token and reimburse the money. And obviously, that person will have paid maybe an interest rate to the investors. But it makes it more fluid and more
Yes.
accessible. Than going through a long process. Let's say when you go to a bank, it takes much longer sometimes.
Yes. So basically, what you are talking about is speeding up the process via digitization, sorry, and having the level of visibility required by the different stakeholders on basically on the click, if you think about it, because all those documents have to be shared by different participants to the transaction and at different stage of the end-to-end process as well. Is that correct?
Yeah, and also we save a lot of money and time, because those documents would have been shipped by one of the, the HL or whatever, like the couriers, and sometimes I've had people telling me the documents get lost, and the
Yes.
value of the documents is like sometimes billions.
Yep, yep.
So and let's say you have a shipment stuck in a port, and the machines cannot be released. You paying, fees,
Mhm.
and so all of these things together, you reduce cost, you reduce time. So for something that would take a few days for the documents to arrive and so on, you can do instantly.
Mhm.
You go online, you create a document, and your document is ready, and you can verify it, and so on. So
Yeah.
it's also, for some businesses, it's crucial, because that means you can be paid quicker, you can get your delivery faster, and also for the customer, they save time. Something that would take months, they would get it maybe in 2 days.
Yes, that makes sense. So one of the challenges that existing stakeholders have is the integration with their system of records. When we talk about blockchain technology, a lot of the challenges have been around how do we ensure that those new infrastructures integrate seamlessly with existing infrastructures. So in the example of TradeFinex, do you actually integrate with, I don't know, QuickBooks, existing ERP like Salesforce, or what would be the process, or is it something that is on the roadmap?
Okay, TradeFinex. People can have, for instance, a link that takes directly to their platform where they do KYC, AML, and
Mm-hmm.
everything. Let's say you decide to create a pool on the website, and so that can take directly to your place. But for instance, let's say you're using custodian, then you would have to do first onboarding with the custodian
Mm-hmm.
to do it off ramp, on ramp of the money,
Mm-hmm.
and then you create your documents and you follow through with the. So now when you for the verification of the documents, again, we will that will be verified on chain. and you can see, who is owning it, what's the value. Everything is following the standards for MLATR compliant documents.
Okay. So how far are we, hypothetically, from SMEs using their own, system for invoicing and accounting to be connected with a system like TradeFinex, so they can just say, okay, I have recurring revenue, for example, from this, and I want to bundle those invoices and tokenize them in order to raise or to manage my cash flow better. Do they still have to import, export, all the documents from one platform to each other, or down the line there will be a world
As
where
soon No, if they have a reliable way of verifying for the person who is investing in the pool to
yes.
give that treasury, if there is a reliable way to verify it, not really.
Okay.
But if you want to guarantee and have something, that you're sure it's reliable, we have the tools that we
Yes.
put. We have there. It takes few seconds. You go online and you create it, and it's there. And then you can, upload it onto the pool you're creating. You decide on the yield you want to offer,
Mhm.
and you decide on the days. Usually it's no more than 90 days. It could be 30, 60, 90 days, because we're looking first at short-term
Yep.
treasury kind of thing. And this is it. And then they can they wait for people to check it. We match the demand and offer,
Hmm.
and so people can then mint our what we call native stablecoin, but it's more of a liquidity protocol,
Hmm.
FXD, which is now collateralized with XDC. But we are adding more things like gold and other things to the pool, so that it's over collateralized.
Hmm.
Um, and it's on chain. You can also verify on chain what's there as a collateral,
Yep, that
which
makes
is
sense.
not the case with sometimes other stable coins,
Yes.
existing in the market, like the private ones I'm talking.
It will be
The
interesting
last,
to have an idea of the size of the market on TradeFinex. So on the investor side, how many organizations have
Mhm.
currently been onboarded?
Okay, so the ones onboarded are the ones doing the pilot.
Hmm.
So if
Yes.
you go on the TradeFinex, there is a market portal page. You can see there's about I think 10 of them, and there's also more to come that we haven't locked yet on the system. So we've worked, for instance, with companies like InvoiceMate, ZOS,
Yep.
who actually do invoice factoring, invoice discounting,
Yes.
to bring those liquidity to their customers. Yeah, we've done also cross-border, pilots with Singapore and Malaysia, where I was mentioning earlier there was a shipment
Hmm.
that took 7 days. It was copper, uh, and for 7 days it allowed for the shipment to have some treasury. Yeah.
Some treasury, some financing. I'm very sorry about this. I am making sure that Christoph is able to access. I just replied to him saying, um, okay.
Mm. So that's the and more companies want, and I was myself a bit surprised because even larger companies are interested, because if they can have that extra treasury, that means it's extra trade for them as well.
Yes. So I'm very sorry for this. It never happened before, but yeah, there is a first for everything. We are managing.
Yeah, I got a Google myself the
Yep.
first time. Yeah.
Yep. I will check it. Okay.
Mm.
So as we are well now into 2024, what are the key, I would say, challenges and opportunities that you are seeing in the space, and what are the top three priorities you would say for the industry to work on to really make the to evolve the trade
I,
finance
I,
sector? Yeah.
I think it's to have regulatory clarity for more places, and then maybe have a standard or something, or license or something that can make it, more interoperable when it comes to cross border, and also access to liquidity made. There is this risk factors that needs to be mitigated, and I think that's also one of them. Yeah. Hi, Christoph.
Hi, Christoph.
Hi. Nice.
Y-
So,
Yes.
So
apologies.
you were in jail
I got
in the room.
a Google link, but no Zoom link.
Me
So,
too. I went first on that one.
Apologies for this, and the mistake is on our
oh, no
side.
worries.
Yes, Christoph, if you could maybe introduce yourself and introduce what TradeQ is doing, that would be great.
Yeah, sure. So, Christoph Gugelmann, and I'm the CEO and co-founder of Tradeteq. Tradeteq is making trade finance investable. We are serving as a transaction servicer on the one hand side. On the other hand side, we are creating investable products for specialist funds that focus on trade finance. And then also, we are now moving towards the world of tokens, where we have done the first steps on the XCC network previously, but where we want to replicate what we have done in already $3.6 billion worth of note issuances, when basically want to replicate the same success on the chain.
Yeah, that would be great. I don't know if you're aware, but I saw earlier in the week that Deutsche Bank released a report on the challenges and opportunities of trade finance. And one of the case studies that they mentioned was Tradeteq and the work they did on revolving short-term receivable. I don't know when that was, but that was one of their flagship case studies in the report. So great to have you joining us. I think to the benefit of the audience as well, what we could do is to, I will ask you from your point of view, because you're coming from different side of the market in a certain way. From your point of view, Christoph, what are the common problems and challenges in trade finance today? And the context behind this question is that's the same question I asked Saloi earlier, was that there have been a couple of like say flagship trade finance network, so TradeLens, Marco Polo, Contour, and over the last 18 months, they have all ceased operations basically for different reasons. Lack of finding a sustainable business model or not being able to attract sufficient, I would say, user base on the platform. So from your experience of having run Tradeteq for a while and based on the feedback from the different stakeholder groups, what are the challenges and the problems at that point?
Yeah, thank you for the question. And there's actually many facets to look at. So from a blockchain perspective, I think there are two use cases. On the one hand side, what essentially has failed in many cases is the kind of the distributed ledger information, where you try to share information between suppliers and buyers and funders and other counterparts and make that process a more efficient one. I think this will still come. I think this has to come. It makes process obviously easier. It makes them more fraud proof. It creates transparency. So that's great. But it is maybe not a big enough, and quick enough opportunity to implement overnight. Where you will have the second use case in blockchain is the tokenization. And I think the tokenization really immediately makes, for parties that embrace it, makes immediate sense. So the benefit, of course, here is that you have 24/7 access to trading. The whole friction costs around settlement becomes almost negligible. And you now, for the first time, have fractional ownership. So fractional ownership in particular means that it will become an accessible asset class for pretty much anyone. if they fulfill, of course, the regulatory requirements and are accredited investor or whatever, kind of the necessary terms and conditions of the investment are. But that is really, I think, where we will see the quickest wins. So again, coming back on the distributed ledger side, where we just share information, that is great. That has benefits, but it will take time to implement since it touches millions and millions of SMEs. And until all of them have defined the standard and the way to interact efficiently, there will still be some time that will pass. And on the other hand side, I think the tokenization will work very quickly and can make a massive impact. Then,
yes,
yeah.
go ahead. Sorry.
So the other aspect in general, and I think that was in your question as well, is why is trade finance not easily accessible by anyone, essentially, whether on chain or off chain? Why is it so hard for investors to get access to it? And here the reasons are really three aspects. It's the workflow. It's usually operationally quite intense. You can very quickly make mistakes. These are all underlying instruments in trade finance that are super granular, very short tenor. They never really pay on time. Sometimes they pay partial, sometimes they pay in bulk. So there is complexity, and workflow doing that in a manual, more traditional way is just not really working. The allocation, that's another part. So it's very hard from one source to create an investment that also then has full utilization. So meaning if I want to deploy 10 million into trade finance and I just go to one corporate, there is no guarantee that that corporate actually needs trade finance in 10 million for the next 2 years. So I need diversification, and I need to have the ability now to source from multiple parties. That drives up the utilization, that drives up the diversification. It also drives up the yield. And then lastly, it's the way how I package the whole thing. So in the traditional world, people have done securitizations, and that can be very cumbersome and very complicated and costly. The tokenization is just the on-chain version of a securitization. And also here, without certain levels of standardization and a programmatic approach, again, it's costly. So this is what Tradeteq brings to the table is the full automation of the workflow, the full allocation automation, and then programmatic securitization or tokenization.
Oh, thank you very much for that. You mentioned a lot, but I will start on the part of standardization. So one of the things that different stakeholder groups have been still facing is that are we not at risk of creating new silos? There have been, I would say, private and consortium network adopting certain standards, for example, the ERC 1400 to tokenize their assets. Then we have other stakeholders tokenizing on public permissionless network. So the fragmentation of liquidity by having all different parties utilizing different, I would say, networks and not being able to have this interoperability between platforms is one of the key risks, it seems, as the real world asset tokenization narrative and actually use cases plays off. So from your point of view, Saloi and Christoph, where are we in terms of standardization of a tokenized asset, and what are the needs of the stakeholder groups to make full use of this and also integrate with their existing systems?
Yes, I think the tokenization per se is not so much the issue. It's much more and I think you hinted towards it's having all these private chains. Now, I completely understand that for many highly regulated institutions such as banks, they will lean naturally towards private chains because they say, then we have more control and also again kind of like have less risk in terms of any bad actors or being on there. But I think the whole reason of having blockchains is to actually, kind of like being able to make it accessible, make instruments accessible to anyone. And that's why I think the only path for me is we need to make it work on public chains. And I understand that regulation needs to follow in this regard. And Yeah, so I think that's really the path forward.
Yeah. Saloi, do you want to, because TradeFinex is built on top of a public permissionless protocol as well?
Yes, I think from our side we've been we've developed a blockchain which is EVM compatible, so it's the Ethereum virtual machine, and now we're coming up also with our own, I would say, interoperability with XDC0, which is literally the capability of being able to connect to the other networks.
Okay.
As I was saying earlier, you cannot have trade finance or tokenization if you are just in your little corner doing your own thing. That's not going to work. You really need to be connected to everything else through API, through cross chain, through the EVM compatible tools, and so on. So if this is not taken into consideration from the start, yeah, that's not going to help every projects work.
Yes. So in terms of, if we think of trade finance as an asset class in itself and different documents being able to be tokenized, what are you seeing? Of course, invoice is the flagship one that everybody thinks about, but what other trade document or trade finance document and other opportunities that you are seeing out there in terms of tokenizing those assets, but also bundling them into new financial instruments for which there is a demand? Because it's one thing to being able to tokenize, like technically, and being able to have the right infrastructure in place, but it's very important to have the other side of the market driving the demand for those instruments as well.
Yeah, look at the market. If you look at the securitization market, is just the structured securitization market is a $3.1 trillion market, and here I'm excluding all the agency business, which is another, I think, nine plus trillion in the US. So it's an enormous market, and everything gets securitized, from credit cards to student loans to EV to literally anything you can think. Any commercial activity gets securitized. Trade finance, for the reasons mentioned before, not, but that will change, and I think that will be one of the biggest game changers in the market. And I think anyone that now wants to purchase asset-backed securities, it's not so easy. You cannot show up with $1,000 and just go and purchase a student loan, securitization. So the benefit of the tokenization is really that I think that fractionalization, and the reason why it has not happened as of today, although I think everyone would agree it is in principle no-brainer, is still bottlenecks around the KYC. So what I mean with that is, today, if someone launches a project and says, I have a real-world asset token, likely, that it is somewhere on a launch platform, and likely that launch platform will not have, hundreds of thousands of different opportunities listed. And it's not just the first issuance, but it's also the secondary trading. It's just the deepness is not there. So question is, why has that not happened? And the reason here lies in the central security depository rules that have been designed after the credit crunch in 2007-8 to actually give the regulators more control and create something, in essence, similar to the atomicity of smart contracts. So they create a clearing system, or which has always been used, but now everything has to go through it. So a clearing system where one party sends paper, kind of the investable instrument, the other one sends the cash, and then the clearing agency essentially says, now I have both sides, now the transaction actually has happened. And smart contracts can do this much cheaper, much faster, and much more efficiently. So we need to find a way now that that kind of becomes also legally admissible in all jurisdictions on a broad scale, not just in sandboxes and exemptions. And then I think we will open up the secondary market. And once you have the secondary market, any accredited or retail investor will be able to log on to one platform one-time KYC, and then can basically trade in and out all day long. And then I think at this point, everything will change, and we will start to move money from the off-chain world into more tokens because it's just much more attractive to access it that way.
That's a good point. But Saloi mentioned before you joined the new risks associated with bringing those assets on chain. So we can talk about, of course, smart contract security risk, but also stablecoin risk. So we need to trust the issuer of the stablecoin, assuming we are talking about USDC with Circle or USDT. Well, USDT, we know the challenge with confirming the reserve from Tether, for example. So all the education aspects that Silo you were mentioning about, it seems even in jurisdictions which are more, I would say, pro digital assets, so not the US for now, there is a lack of understanding, even from some, I would say, regulators on articulating what are those risks, well, new digital asset risk. So before they can even allow retail investors to participate in those markets and secondary markets, there is a significant like engagement effort to be done with the different stakeholder groups to understand those risks, to educate the different so retail investors, like which is the most protected type of investor anyway, before they can access. So based on your experience as well in different jurisdictions. Oh, sorry, was I on mute?
1 second.
Just
Oh,
2
okay.
seconds.
So based on your experience, where are the most, I would say, retail-friendly jurisdictions where we could see a secondary market happening the faster, so broader adoption faster over the next few years?
I think there's many jurisdictions now that are actually for security tokens, right? Here is not the question, can I avoid regulation? Here is essentially you just do the same thing you would also do under any retail offering. You go and get a prospectus done. You usually have to get it approved by the regulator, and just the form now is different. So I think most big jurisdictions like the US are actually quite straightforward in this regard. So if you fulfill the same requirements, you will essentially be able to launch a product. It's the same in Europe. Obviously, certain jurisdictions have been spearheading, like Liechtenstein with the Blockchain Act and a few others. I also think the UAE is up and coming in this space and makes every effort to kind of provide the right environment. And I think I want to stress that this is what cannot happen is that we are selling just because it has a new technological wrap, selling something of no value, to customers. The way I look at it is it's exactly the same type of regulation that we apply for any, instruments that we distribute under prospectuses and that are regulated. We just do it more efficiently.
Okay. Salo, would you like to add something to this?
Yeah, what I was talking about earlier is here in the IFC, is the new digital asset law, and I think that's still very new, but it's creating a framework where people can operate safely and adapt, the regulation as we go. And of course, when it comes to stablecoin, I think if you can verify on chain the collateral and everything, I think that makes a big difference, and that's why I was telling you about the protocol we've been working with. Fathom, for instance, it's over collateralized, so you know exactly what's there when you do it. Yeah, when you mint it.
I'm cautious of time now. We have 7 minutes. So, is there anything else? And again, apologies, Christoph, that we apparently sent the wrong link. So you are not able to participate to the full conversation, but it was already very insightful to have your perspective towards the end. So before we go, are there any questions or points you would like to raise in regards to challenges and opportunities in 2024, or maybe what's next on the roadmap for your respective companies? What do we have to look out for, basically?
Yeah, I think it's always a continuous as the technology evolves and also the business practices evolve. I think there was obviously a lot of focus on stablecoins, and stablecoins have a big role to play. But I think that there are better things as well, where now with RWA assets, where you can actually create very low risk assets that are fully collateralized. The underlying collateral is ring fence. It stays with trustees, with custodians, completely segregated the same way it's common practice in finance and has been for decades. And where you can actually, on top of that, earn a very good yield. And I think that's where we have to go. So kind of just holding stable coins for the sake of it. I think the stable coins is a payment means for me. It shouldn't be necessarily a savings means. If I then go and take stable coins and stake them, then I take additional protocol risk potentially. So is that really the best thing? Or would it not be better to invest in RWA assets and get a running stablecoin income out of this? So I think there's a lot of exciting things which now start to evolve, which will, I believe, reshape the market.
Yes, definitely. Tokenized money market funds. So, Saloi, you were mentioning the BlackRock. Also, ETFs. There are a couple of HSBC money market funds that are now being tokenized by parties such as Tokeny, I think, with others. So, definitely interesting development. Saloi, any word?
Yeah, I think now as a layer one blockchain from our side, we are focused on RWA projects around, fintech, DeFi, this whole tokenization of real world assets. And it's about bringing quality projects that will, get into the ecosystem and that can be interoperable with the rest. And the more quality interoperability we have and safety and QAC and custodians and all of these different participants, it's about creating an ecosystem. And so our focus now is to make this ecosystem robust. And working with company with Tradeteq has been amazing from that side. Yeah.
Great. Well, there seems that there are no questions in the Q&A. I'm just checking now to ensure. I would say to attendees, if you have a question, it's now your opportunity to ask. We have a couple of minutes left. Otherwise, I would say, well, thank you, Saloi and Christoph, very much for your time to share, for taking the time to share your knowledge and insight with us. And as usual, this webinar will be posted on the YouTube channel, and which is where we get actually most of the feedback of when people can watch on their own time. So I would just check
Thank
again
you.
that there are no questions. Okay, and all good. Well, thank you very
Thank
much
you.
again.
Thank
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 you.
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 Bye.
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 Thank you. Bye.